Okay, session's now being recorded, and I am Professor Bates. This is my 5th year teaching at McKendree. I've been teaching online for them for the past couple years since I moved first to Nashville, Tennessee, and then back in April I got an offer I couldn't refuse from a company in Atlanta, Georgia. So I'm actually down in Georgia right now, coming to you loud and clear over our WebEx. So a little bit about me. As I was just telling you guys, I work full-time as a senior systems administrator for a very large public company where I basically administered their instance of NetSuite, Burst, CPQ, and a few other ERP and CRM systems and BI analytics tools. I basically, what I mean when I say I administer them, I actually built them and started and basically set everything up, did all the implementation work and conversion work from Oracle, which is another major ERP system. So I work a lot with reporting, searches, analytics, setting things up, programming, scripting, you name it, development work. And my background was actually in finance and accounting. I was an accounting manager for a long time for another public company and have since been pulled over into this world of consulting and ERP implementation and things like that, because you have to have a very strong financial background in order for you to be successful in setting these systems up. Then, as if that wasn't enough, I've got 2 sections of classes with the financial accounting group. I will also be teaching 1 section of managerial accounting after this is over, and then hopefully also in the spring teaching some more sections. In addition to that, I am a full-time doctoral student getting my DBA in management. So, the doctoral degree has always been a goal of mine. I've always wanted to teach college full-time. I love teaching. I love working with students, especially at the collegiate level, and developing programs, better programs for people and better programs for students to give them real skills when they get out in the business world, so that are going to be useful and marketable to them. So that's kind of my hope, is when I finish the DBA, I'll get to an offer from a full-time university, full-time teaching position at a university somewhere. Let's see what else. Other than that, married, 2 beautiful stepdaughters with 3 crazy dogs, and living in Georgia on a lake, enjoying it when I can, and taking up a little fishing when I can, and traveling a lot. So I've gotten to see a lot of the country this year, and that's been a real blessing. Got to go to Monument Valley in San Francisco and Phoenix, Arizona just in July. So that was a lot of fun. A lot of travel, a lot of fun. So that's enough about me. Let's get started by talking about our course here in Blackboard. I want to start by giving everybody a quick tour while we're recording this, so that everybody's aware of all resources that you have available to you in this class, okay? And I'll just kind of tell you how I work things. I know that this is probably one of the first times you've had webinars. They are not mandatory. They are recorded, and you can play them back whenever you want to, as many times as you want to. You can pause, do whatever you need to do. That's one of the reasons that I do this. I want to make sure that you guys have a very clear understanding of, expectations, as well as your homework problems, as well as material. So That is the only way you're going to be successful, is if you really use all your resources in this class. I know the webinars are long, and just so you're aware, from Module 3 on through 8, there are already webinars out there available to you. So when we hit Module 3, I'm actually going to just host the question and answer session. I'm going to go ahead and mute everyone. If you need to unmute yourself, please do so. You can also use, you should see a chat box down here. I am watching it, and I will be happy to answer questions as we go along. If you type the question in, I will basically read it out loud and then answer it. Okay? So, Blackboard. You come in, you're going to see your announcements. So you know, I am going to post a lot of announcements in here. I will try to keep them brief, but you should watch your announcements. And I always try to make sure that when I do the announcements, I have a fun little feature that says email the announcement. So it will automatically email you the announcement as well. Okay? I do post the webinar recording links in these announcements as well as in your modules. So let's take a look real quickly at the modules. You'll see here you've got Module 1, which is this week's, Module 2, 3, all the way down through Module 8, right? So in here you should read this information that's sitting up in here. It gives you all of your due dates, tells you when things will be available, if they're not currently available. And one thing to note, Module 4, you have your midterm exam. Okay? Now this one will be done online. Your midterm will be done online, and it will be, you'll have 90 minutes to complete it. Now it's not very long. I think there's only 20 questions. But I'll verify that. Don't hold me to it. It's not very long, but I give you 90 minutes to complete it. All of your quizzes, and please, please note this. I'm going to say this one time. All of your quizzes and this midterm exam have to be completed in one setting. When you leave that quiz or midterm, it scores your responses at that point. So if you've only filled out 3 of the 18 questions on a quiz, it's going to give you a 3 out of 18 as long as you got all 3 of those correct. Okay? So make sure when you sit down to do this that A, you're in either Google Chrome or Firefox, because Internet Explorer does not work with these quizzes. It's very buggy. Okay? And it could possibly cause problems with your quiz if you do it in Internet Explorer. So please make sure you're in Chrome or Firefox. The other thing, make sure you complete it in one setting. Okay? I took the quizzes being timed off. So you have as much time as you need to complete the quiz. It's up to you. But it really shouldn't take you any more than 30 minutes. Okay, and I'll show you why here in a minute. Okay? Module 8 has your final exam. The final exam will be a take-home exam. Okay? So everybody breathe a big sigh of relief right now. The final exam you can take, you know, and it's literally a Word document. It's a bunch of problems. I think it's like 10 problems, but you take it home and you complete it. Okay, and it is not comprehensive. It's only from chapters 5 through, or modules 5 through 8. Okay, so that would be from chapter 7 on of what we study. Okay, but with that said, on the final exam, you still have to know everything from the first half of the course, because in accounting, everything builds upon your foundational knowledge. You have to know the beginning part in order to get everything afterwards. So if you don't understand something, it is imperative that you guys ask me, okay? I am more than happy to answer questions. Don't feel like you're the only one that doesn't know. Please, please, please ask me, and that's what these webinars are for as well, okay? Especially once we get to Module 3. You'll see that we're basically just going to have a question and answer session because I've already done these webinars for Modules 3 through 8, okay? All right, so to get into all the stuff that is contained in a module, you click on this Module 1, okay? And in here, you'll see all of the stuff that's available for Module 1. You need to take a look at the PowerPoint slides and use the voiceover, okay? There should be voice that kind of walks you through these PowerPoints and instructs you with what you need to know for the various chapters, okay? The Module 1 practice problems. I will tell you that my students that have made A's in my classes, they have gone through and worked these practice problems and then checked their answers prior to working their homework and then getting the answers when the homework solutions are available, okay? So the other thing that you need to do to be successful is this Module 1 study guide. All right, I'm going to pull it up real quick because I want to show you what this looks like. These are study guides that I've created, okay? I have gone in and gone into the quiz and basically said, okay, what do these guys need to know to pass this quiz? So this is coming directly from the quiz itself. Suzanne, I'll get back to your PowerPoint question in just a second, okay? These study guides come directly from the quiz itself. And you will see if you go through and you answer these questions prior to taking your quiz, you will likely make a perfect score. Okay? So just make sure you're using these study guides. Again, all of this is up to you. You don't have to use it, but your grade will reflect your effort. Okay? So I'm basically handing you the quizzes and really even the exams to some extent by doing all the homework problems on a silver platter. Okay? If you do the work, you will make a good grade in this class as long as you understand it. Okay? So if you don't understand it, or if you're getting a lot of things wrong, then you need to reach out to me and ask me, and I will be more than happy to help you. Okay? Let's talk about the homework for a minute. I'm going to get back to the PowerPoints, I promise. Let's talk about the homework for a minute. The homework, you have to complete all of it to get full credit. I don't give grades. I make this class as easy as it can possibly be, and I've had people who've said, I've taken this class twice at other colleges and it was impossible for me to pass it. I take it with you and I make an A. Okay? So make sure you do the work. Don't make any excuses for getting it in late. I do understand, and assignments, lateness on assignments, the only exceptions I will make are medical, death in the immediate family, and military deployment of some sort. Okay? So these are all things that I know life happens and you can't help it. If you have to take, your child to the ER or something like that and it's the night you're planning to do your homework, I understand. Just please tell me. Don't just, not let me know that something has happened. Okay? I'm really easy to work with. I will help you as much as I can. So just please communicate and let me know what's going on. That's all I ask. All right, the PowerPoints. Suzanne wants to know, how do you enable the PowerPoints? So if we go in here and we click on one of these, right? Open it up. going to download. Give me just a minute. It's popping up on my other screen. All right. So when it pops up, this is what it's going to look like. You're going to see an Enable Editing button up here. Do you see that, Suzanne? You're going to hit Enable. Okay. Then...
And what do you do if that Enable button doesn't appear?
It should.
It should? Okay.
If it's not appearing, it's likely already enabled. You probably have a setting on yours set that doesn't require you to enable it. Okay.
Gotcha. Okay.
Then you see this little speaker here, right here in the middle of the slide. If you click play.
The sole proprietorship is by far the most common form of...
It actually plays the lecture. Okay? So does everybody understand how to get the voiceovers on the PowerPoints?
Yes. Thank you.
Perfect. All right. So that's the PowerPoint.
Thank you.
No problem. Same thing with the practice problems. You just click it and it downloads and you open it up. It's opening on my other screen again, of course. Oh, there we go. You can enable editing and it popped over to my other screen. And basically it's giving you the answers to all the practice problems, right? So if you want to just view one page, I don't know if you guys know this, but you go over to view and you hit one page. And there you can just view one page, if that's ever been annoying to you like it is me. One other item of business. I know all of these answers are in Word documents, but coming from the business world, you have to know how to use Excel. And so I want everybody submitting their homework in an Excel document. Okay? So basically, I put this together for our first bit of homework, first module assignment. Okay? I want you to use Excel, and I'm going to teach you how to do formulas in Excel as well. So if you don't know how to do that, this is going to be a huge tool for you. Okay? I have also, cancel. I have also put out here in the course documents section of Blackboard, there is an Excel tutorial out here. Okay? There's a worksheet masters which is out there for you to use. You can see down here, each and every one of these is a different type of Excel spreadsheet, and it just really kind of sets it up for you. Just good formatting. Okay? Some of them will be applicable, some of them won't. So it's up to you if you use it. If you would prefer not to, if you would prefer to use everything or do everything by hand, that is perfectly fine. Another thing that I've put out here is this debits and credits cheat sheet. Okay? One of the biggest things that, yes, Amanda, she asks, can we use these and enable the editing and put the info in ourselves? Yes, you can. Okay? So the debits and credits cheat sheet just hopped over to my screen. Hang on. I put this out here because this is usually one of the hardest things for students to get. Don't think of your bank statement. Okay? Your bank statement does it exactly the opposite of what you will mostly be doing for accounting. Okay? And I'll explain all of that when we get to it. But this little debits and credits cheat sheet helps you understand that a little bit more. Okay? And then there is another cheat sheet out here called Linking the 3 Financial Statements. And this kind of shows you, it's really confusing, but you have to follow the arrows, okay? And it helps you link the 3 financial statements. You're going to see tonight we study 3 financial statements, and that's it throughout this entire course. These are the basic foundations of accounting. If you can understand how the financial statements link to each other, you will have mastered this course. And this sheet basically tells you how that's done. Okay? So, for your reference, and it will help you tremendously on homework, quizzes, and tests. Just saying. Okay? So that's the course documents. That's everything that's in it. Okay? You should already be familiar with the syllabus. Downloading it there. Your orientation is here. My information is here. Okay? My email, and this is actually my cell phone. So if you've got a question and you just can't wait, you want to text me, go ahead and text me on this number. I can't promise I'll get back to you that second because I do stay in meetings a lot during the day. Okay? But I will get back to you within the day. Okay? Usually I try to get back to you within an hour or 2. And that's normally pretty possible for me. Okay? So just feel free to text me or email me. I do have the email on my phone as well, so I'll see either one. Okay? Let's see. You've got your grades and your course evaluation there. I don't think you guys have the tools, have mentioned the tools. So that is pretty much everything in Blackboard. Does anybody have any questions about that?
No.
Everybody's good? Okay.
No questions. Sounds good.
All right. So I know we've got a couple of people with book issues, getting books, and that's okay because I have the ebook. So basically what we're going to do in these webinars is actually go through and kind of just chat about real quickly the chapters that we're covering, and then we will go through the homework problems that are in this book. And I'm not talking the practice problems, I'm talking the homework problems. This is why it's important that you watch these webinars, okay? We will go through how to do the homework problems, and I will answer any questions that you have. I am not going to do the homework problems for you, but I will give you some of the numbers of where to get things, and then you'll have to, and some key components, and then you'll have to figure out the others. But in most cases, once I show you where some of the numbers are, you're going to be able to get the rest of it on your own. Okay? So, with that said, anybody have any questions so far that they want to ask about the class or things that they're concerned about or anything like that? Let's go ahead and take care of that right now, and I will then start on Module 1. Amanda asks, will there be a required discussion board every week? No. You will have more than enough to do with the practice problems, the homework problems, and the quiz. Trust me. These homework problems, I will forewarn you, are long, and they will take you many hours probably to do. That's why there's so few. So don't think you're getting off easy, because once you see how long it takes you to do one of these, you'll understand why there's only one. Okay. Ray asks, what exactly are the due dates for each assignment? I just want to make sure I stay on track. This is my first online class. That is an excellent question. Let's talk about that. So, every week, your homework will always be due on Thursday at midnight. Okay? I'll say that again. It's always due Thursday at midnight, with the exception of the final week. So Module 8, the last week, the homework is due Monday at midnight. And the reason for that is because the final week of our online classes is always a short week. We only have till Thursday to get everything turned in. And then I have a very short window to get everything graded and entered into the grading system. Okay? So Thursday, the last week, is the final day of class. That'll be when all of your that'll be when your quiz and your final exam are due. Your homework that final week is due on Monday. Your homework weeks 1 through 7 is always due on Thursday at midnight, or at 11:59, let's put it. So Thursday at 11:59, okay? Then Friday morning at 8:30 in the morning, you will have the ability to see the homework answers, okay? So basically what will happen is you'll email me your homework every week, okay? And in an Excel document, again, no Word documents, I want everybody using Excel. You'll email me your homework every week in an Excel document on by Thursday at 11:59 p.m. Central Time, okay? Once I receive that, I will go through and see if there's anything, that you've done that's, vastly wrong, or if you've completed everything. As long as you complete everything and it looks mostly right, or you've got the basic concept, maybe just a few numbers are off, you'll likely get full credit. So just plan on that being the case, okay? But you have to put in the effort. If you don't put in the effort, and I think that you haven't done the work fully on your own, then you will not get full credit, okay? Please be academically honest. That's all I ask. I'm a student too. I understand the pressures. I understand the pressures of working and going to school full time, but don't cheat yourself out of an education, okay? Because at some point you're going to have to know how to do this anyway. All right. John asks, will you have an Excel document for the homework in every module? You can use the Excel document that's out there with the templates, and yes, I can create an Excel document for every module. Okay.
Okay.
That will help you guys know if you've got everything included or not, and if you haven't, what you're missing. Okay.
Awesome.
All right. What else? What other questions do you have? Everybody feeling good about this so far?
I have a question about the practice problems.
Sure. Go ahead.
Okay. So it was problem E2-12A.
Okay. Let me get to the practice problems real quick.
Okay.
Modules. All right. So which one is this again?
E2-12A.
E2-12. Okay.
All right. So we go through and we figure out, what was purchased, what is this, what is that, and then we start making our T accounts, correct? So in the account receivable T account, you get the legal fees that were earned, which is $11,300, as well as the cash from a customer, right, for $9,400. So one goes on the credit and one goes on the debit. I'm just not sure why the $9,400 goes where it goes and the $11,300 goes where it goes.
Okay, great question. And we're going to talk about this in detail, okay? The accounts receivable, so you'll learn as we're going through this, all right? Revenue and accounts receivable go hand in hand, right? So
Right.
customer buys something from you, right?
Right.
You're getting revenue from that customer, right? So you're going to book an entry to go two different places because all journal entries have to equal 0. So there always has to be a debit and a credit that equals 0, okay? So the debit is going to be to revenue, okay? The credit on a customer account is going to be to accounts receivable, okay? For the 11,300, I'm looking for this problem in the book so that I can read the wording exactly. I actually have a hard copy of the book too, so bear with me a minute. Do you know what page that was on, by chance, John?
I was actually just looking for it. It was on page 91.
Ah, hello. It would help if I was in chapter 2, wouldn't it?
Yeah.
I'm looking at chapter 1 going, where is it? You can tell when my days have been too long. Sorry.
All good.
Okay, so this is 12A.
I guess it's 12B actually. Not 12A.
12B, that's right. 2-. No, this is 2-12.
It's page 87. I'm sorry.
Okay.
Not to be.
2-12A. Okay. You're confusing me. That's not hard to do. Okay, so you build clients for services rendered. Okay, so that's why on accounts receivable, you're expecting to receive that cash. You have not yet received it. Okay?
Okay.
So in the first example, the 9,400, the reason that it goes to cash, a debit to cash and a credit to accounts receivable, is because they paid for that service right then and there. They didn't put it on account.
Okay.
So they paid cash for it up front. Okay?
Okay.
A customer, if you bill a customer and they don't pay you immediately for it, so you send them an invoice or a bill, then that's called on account. So it's like giving them a credit card or a credit, line. And when that happens, that becomes a credit or a debit to accounts receivable, I'm sorry. So that's what they did on this particular instance when they billed the client for services rendered. They had already provided the services, but they had not received payment for those services yet. So they are still owed that money. And that's why it's a debit to AR. Make sense?
Yes, definitely.
Okay. We'll go over it in a lot more detail, so don't get caught up in that right now, because we're going to go over both chapters, and I'm going to explain a lot of that to you. Okay?
Excellent. Yes, very much. Thank you.
All right. Okay, Amanda says, will you load a study guide for each module in the course document section? If you look through all the modules right now, you'll see one's already out there. Okay? And you should have availability to all of them right now. Susan asks, are the quizzes always on the same day of the week? Yes, they are always due on Sunday at midnight, well, at 11:59 p.m. Okay? So quizzes are the last thing you do every week. They're always due Sunday at 11:59 p.m. Okay? Any other questions about those? So, homework's always due Thursday at 11:59 p.m. Quizzes are always due Sunday at 11:59 p.m. Make it easy. The last quiz is due on that Thursday of week 8. And that is, again, all of this is listed out. When you look at these modules, all of your due dates are sitting right here. So right here you see quiz must be completed September 6th at 11:59 p.m. Okay? Homework assignments will be due via email before September 3rd at 11:59 p.m., which is Thursday. Okay? Homework assignment solutions are posted the next day at 8:30 a.m. Okay? So, any other questions before we get into Module 1? Okay, we're going to head into it. Now, hang with me. I'm going to actually go pretty fast through this because you've got a lot of stuff out here. I'm not going to read this to you. I'm not going to kind of spoon feed it to you, but I am going to explain some important facts through each one of these. So, as I said, and this is something that you need to remember throughout this class, we are going to study how to create 3 financial statements: the income statement, the balance sheet, and the statement of cash flows. Those are the 3 foundations of any accounting. Okay? You have to understand how to create those. Now, with that said, you have to understand what goes into creating those. Journal entries, invoices such as revenue from customers, accounts payable like the bills that you would pay on your building and things like that. This stuff all goes into the income statement. So your revenue and your expenses go into the income statement and tell you your profitability. Okay? On the other hand, your balance sheet, which is where anything that's on the income statement has an offsetting entry onto the balance sheet. And what I mean by that is a debit or a credit on the income statement has either a debit or a credit somewhere on the balance sheet on the correct corresponding account. Okay? So, for instance, revenue on the income statement is offset by AR on the balance sheet. Okay, accounts receivable. And forgive me, you'll hear me say things like AR and AP, and I'll assume that you know what I'm talking about. AR is accounts receivable, AP is accounts payable. Okay, that comes from me having been in this industry too long. Okay, so we're creating 3 statements: income statement, balance sheet, statement of cash flows. We're doing things like adding, billing our customers, paying our bills, doing journal entries for anything under the sun, like stockholders' equity, for instance, where we give shares of our company to stockholders who have given us money to further expand our company endeavors. Okay? So these are all things that we're going to learn about. Okay? And you'll see that mentioned in Chapter 1. So let's talk about the business organizations. You've got several types. You've got a sole proprietorship that's owned by one person. That means you own the business by yourself. Okay? You have a partnership where 2 or more people may own the company together and they run everything. Okay? And then you have a corporation where stockholders basically own the corporation. Okay, so for instance, Walmart, Nike, Apple, IBM, all of these companies are owned by shareholders. Okay, they are all corporations. Okay, and we'll get into more of that. They are the ones that make the stock exchange go round and up and down and sideways some days like today. Then you have various types of business activities. You have the financing activities, which can be debt financing or equity financing. Basically what that means is somebody borrowed money in some way, shape, or form. You need to know the difference between those two. Okay? You have investing activities. Companies will actually invest in other companies, especially when it, kind of makes sense for them to do so. So, for instance, this could be anything from investing in their own buildings and infrastructure, or it can mean investing activities outside of themselves with other companies. Okay, one of the big things that you'll find out happen very often, if you haven't already, is mergers and acquisitions. I've been on both sides of the aisle where I've witnessed mergers and I've been part of acquisitions. So none are fun, but you can survive them. I will say that. Then you have operating activities. So this is stuff like, the accounting department has to create the financials every month. You can see that operating activities could be producing goods or services, right? So those are the various types of activities. And we're not going to spend a whole lot of time on that. I'm going to let you guys read that. You also need to read about ethics and accounting. This is actually a very, very important topic. Okay? One of the biggest things that will affect any accountant is the GAAP accounting policies, so that's GAAP, and SOX, which is Sarbanes-Oxley Act of 2002. Okay? GAAP is generally accepted accounting practices. Okay? So it's a set of standards that basically tells you how you have to complete your books. Okay? And what's acceptable in our country. Okay? There's also another set of accounting standards called IFRS. It's IFRS, and that's the International Financial Regulatory Board. Okay? Those are the people that set up the standards internationally. The United States does not necessarily abide by IFRS. There are differences. They're working to bring them together, but they haven't gotten there yet because there's a lot of politics involved in it. So it's important that you know the difference between all of those. Sarbanes-Oxley, SOX, basically, in a nutshell, says, do you have the proper authority to do what you're doing in the company? So, have all your journal entries been approved by somebody higher than you? Okay? Or if you're in IT, do you have authorization to give that person this computer or to give that person access in this manner? Okay, so do you have proper authorization? And every year auditors come in and they test to see if you've followed all of your written procedures, and it's at your burden of proof to prove that you have done so. So there's a lot of reporting and things like that goes behind this. So definitely read up on that. Okay? It does talk about the GAAP policies. It also talks about FASB, which is the Financial Accounting Standards Board, and the SEC and what they do. Okay? So make sure you're reading all of that because it's all very important. Okay? And it will likely be on the quiz. Then we get into our financial statements. Now, they start out with the balance sheet, okay? And it talks about the accounting equation. And the biggest part of this that you need to remember for the balance sheet, assets is always going to equal liabilities plus stockholders' equity. I cannot say this enough because you guys, I promise you, somebody in class is going to give me a balance sheet that doesn't balance. Okay? When I say it has to balance, it means assets has to be equal to. So if assets are $10,000, liabilities plus stockholders' equity also has to be $10,000. If it doesn't add up, then it's not right. You've done something wrong up in the middle. Okay? So assets has to equal liabilities plus stockholders' equity. Okay? Everybody understand that? Now, here's a key. Listen to this carefully. If a problem gives you assets and liabilities, but it doesn't give you stockholders' equity, and I'm positive that there are problems that do this, then all you have to do is subtract liabilities from assets. You can see that down at the bottom of page 13. I'm going to actually go there because I want you guys to see this. Okay. Too fast. Sorry. Okay, well, there it is. Alright, so here is assets equaling liabilities plus stockholders' equity. The reason I cover this so much, this is a foundation that you guys have to remember, okay? Remember what I said, everything builds in accounting, everything. So you have to understand this from the start. If you're not given stockholders' equity, you can still get it by subtracting liabilities away from assets, okay? And net assets will also equal stockholders' equity. So those are two other ways that you can find that information. In other words, there will be problems that you will likely have to work back into, okay? Work them backwards to get your answer, okay? All right, so this is what a balance sheet looks like, okay? If somebody chats with me, please just hold on for a second or turn your mic on and tell me that you sent me a message, because I've just minimized this so that we can see the entire balance sheet, okay? All right, so here's the balance sheet. You will see here are your assets. This is everything that makes up total assets, okay? So you need to understand all of this. You need to understand you're always going to have cash, you're going to have investments, accounts receivable, inventories, and there might be other things that get added in here as we go along, because they do break out, like accounts receivable, they'll break out prepaid expenses and other current assets, things like that, property, plant, equipment, net. They'll break all of that out as we go along. Then you have liabilities and stockholders' equity. Okay, same thing goes. Here are all your liabilities. Here's your stockholders' equity. Stockholders' equity is always made up of common stock and retained earnings. If you are missing one of these numbers, you can always get it because they'll likely give you total stockholders' equity. Or if you're missing one of these numbers and they don't give you this, you can still get it by looking at total liabilities and assets, subtracting the two out, then you know what total stockholders' equity is, and then you can come back in and figure out common stock. Okay? So that's what I mean by working your way back into a problem. Does everybody understand that?
Yes.
Okay, good. Don't be shy, guys. If you don't understand, please, please, please ask the question, okay? Because it's likely that somebody else in the class doesn't understand it either, all right? So I just want to make sure you're clear, because this is going to happen to you a lot in this class. You're going to have to work a problem backwards to get an answer. And that's just a way to make sure that you understand how to do it and that you truly understand what makes it up. Okay? All right, so the income statement. The income statement is basically consisting of sales revenue and expenses, and that's going to equal your net income or your net loss. Okay? So here's what it looks like. Here's your revenue. Okay, you've got your sales, and you've got other revenue equals total revenue, and then you've got your expenses. And your expenses are cost of sales, so the cost of making all of these sales up here, like your salespeople's travel, it could be cost of goods, whatever can make that up. Okay, here's your selling, general, and administrative expenses, so this is like your salaries for people. Okay, and then you've got your income tax expense. That's going to equal your total expenses. And then you subtract, you take your total revenue minus your total expenses, and that gives you your net income or your net loss. If it's positive, it's income. If it's a loss, it's negative. Okay? And that tells you whether your company's profitable or not. All right? Then you've got your statement of stockholders' equity. Okay? This is your retained earnings. Okay? So, to get your statement of stockholders' equity, you take retained earnings at the beginning of the period. So let's say we're starting July. July 1st, at the beginning of the period, our retained earnings balance was $996,922. We add in our net income that we get from right here. Okay? So this is why you've got to understand how these interact. And we subtract out any dividends that we paid. And usually it will tell you if you've paid dividends in a problem. Okay? So what will likely happen is it'll say your retained earnings at the beginning of the period was this. What is your retained earnings at the end of the period? And you paid $28,000 in dividends. So
why does net income say loss?
Because it says loss in parentheses, because if this number were in parentheses, it would be a loss. It's just a way of notating that account. So it's not actually a loss. It's actually income because it's positive. You see how income is not in parentheses? In accounting, if it's in parentheses, right, it means that you either lost money or it's an expense.
Okay.
Does that make sense?
Yeah.
Okay. So even though it says that, don't let that confuse you. Okay? One other thing to note, and I will tell you this because many of you will get out in the business world and you'll take a look at this and be like, well, that's not the way we did it in accounting. Everybody does this differently. They call these accounts different things. For instance, revenue might be called sales. It might be called income. Okay? So don't let that get you hung up. All right? You have to be able to interchange these terms loosely. Okay? Because everybody does it differently. Everybody calls it something different. Okay? So just be aware of that. That was one of the biggest things that confused me when I was first learning this, is they'd tell us to do the same thing with 3 different words meaning all the same thing. So just be aware. All right? So the statement of stockholders' equity. So here was the balance as of December 31st, 2010. Here was our common stock. We issued common stock, and we repurchased common stock. Okay? So when you purchase common stock back, it's going to be a negative. All right? Because you actually spent that money. You weren't getting money for it. You were spending it. Okay? Here, we got money from shareholders for common stock. Here, we gave money back to shareholders to get the common stock back. Okay? So what you're doing is you're adding all 3 of these to get this number. All right? Then you come over here to figure out your retained earnings. Okay? So your retained earnings balance was this. Your net income, which we got off the income statement, was this. And your dividends that you paid out were this. That's giving you your retained earnings. Okay? So the total, all you have to do is add these lines across. Right? And that gives you your total. Statement of stockholders' equity. All right? Everybody understand? Okay. Statement of cash flows. Now, the statement of cash flows is a little different. Okay? There are some numbers you will get from like your statement of stockholders' equity, your balance sheet, your income statement at times. And other times you will not. It'll be mostly given to you. So like your cash receipts. Okay, this is the money that you brought in. So this is your AR. Your cash disbursements, this is money you sent out. So this is you paying your bills. Okay, this is cash provided by operating activities. You're just subtracting those two out. Your cash flows from investing activities, so net sales or purchases of investment securities. Okay, that does not come from up there at that point. So they apparently gave that to you. Okay, the net capital expenditures. This means stuff that, like if you go out and you buy another building or you buy equipment that's worth, $50,000, that's a capital expenditure, and we'll cover that later. Don't get hung up on it, but that's a capital expenditure. Okay. Cash used by investing activities. So this is where you may have invested in something, okay, as a business. Here's your repurchase of common stock. That, again, came from up here, right? So this is cash flows from financing activities. This is a financing activity. You're going to have to know what's an operating activity, what's an investing activity, and what's a financing activity. So make sure you pay attention to that, okay? Cash dividends paid, exchange rates, and other, okay? So that's gains that you've gotten off of exchange rates and things. So when you deal internationally, sometimes you can get on the better end of an exchange rate deal where the value of the dollar is greater than the value of some other exchange rate, like the value of the peso or something. Okay. Cash used for financing activities. This is probably something that has to do with you obtaining financing that you're paying back. Okay, so this could be like a business loan of some kind. Okay. After you get done with all of that, or I'm sorry, this is adding the two cash from financing activities from here. This is the total of that. After you get done with this, and this, you're going to add them together to get your total net increase in cash. Okay? So then you've got the cash at the beginning of the year. That's your balance. That's likely given to you. You take that and add in this, and that's going to give you your cash at the end of the year. Okay? So that's how you determine your statement of cash flows. And keep in mind, you can do this on a monthly basis, a quarterly basis, or an annual basis. Okay? So you always have to pay attention to the dates that the problem is giving you as well. Okay? Alright, so here's more.
I have one question.
Sure.
I feel like I'm the only person with questions. I'm sorry.
No,
Right.
we're fine.
So, let's see. So our cash provided by operating activities, that's actually cash out, an outflow, or is that an inflow?
That, in this case, is an inflow because it's positive. So you actually, right here, you actually collected money from your customers more than what you spent.
Okay.
Okay?
Okay.
So
So why is disbursements not in parentheses? I get that it's a disbursement, but why is it not in parentheses?
It's just not standard accounting. That's a good question, and it just has never been a standard accounting practice. I mean, sometimes they go by the label of being disbursements.
Right.
Sometimes they go by, like here would be purchases. If this were purchases, this would be negative. This would be parentheses. A lot of times, and I know it's confusing, it baffles me the consistency that the accounting world doesn't have. So I really can't answer that because it's a disbursement. Basically, you spent all of that money.
Right. I get that. I get the lingo. I just didn't know why it was not in parentheses.
Right. Now, that's a good question.
But provided by operating activities is money coming in, correct?
What? I'm sorry, say that again?
Cash provided by operating activities is money coming in, correct?
Yeah, this is indicating that you had more money come in than what you sent out. Yes.
Right. Because that's the difference of the receipt and disbursement.
Right.
Okay. All right, I'm good. Thank you.
Cool. Thank you. Guys, I really encourage you to ask questions. I'm glad that you're asking questions because it helps clarify this for everyone. Okay? So going back down here, we can see that there are more financial statements, and you can go through all of those to try to understand them. The book actually does walk you through it, and you just have to follow the math down. Okay? So, for instance, like here, you just have to follow this math down. Okay? So it gives you this information, and you can see that these two are subtracted out from this number to get this number. So just follow that down. All right? And these are excellent examples. They'll actually help you with your problems tremendously. Okay, management discussion and analysis. This is actually contained in any set of publicly reported financial statements. Public companies have to report management discussion and analysis. So they basically have to take a look and comment on their strategy and their outlook. If there are any outliers, like for instance, if they purchased a company, they have to discuss their decision to purchase that company. And in a lot of ways, you have to also understand when a company is reporting to their public shareholders. Don't be fooled. They will spin this in any way, shape, or form. I've seen it happen at every company I've worked for. And I've worked for some big ones. So a lot of times management will attempt to put as positive of a spin on anything that's happening. So you have to really be able to go in and analyze these financial statements and understand yourself what is going on to get an accurate picture of what's going on with that company, to see whether or not it's in trouble. Okay? And when we get to the end of the class, we're actually going to do a lot of work with ratio analysis and stuff like that, because a lot of these numbers don't lie. The management discussion and analysis, on the other hand, can be pretty, how can I put this? They're good salespeople. Let's put it that way. They're very good.
Basically, put your boots on when you're reading it.
Right.
That's what you're saying.
Yeah.
Gotcha. I'm going to get deep.
So notes to financial statements, they have to note anything such as accounts receivable. There will always be an allowance for doubtful accounts. Doubtful accounts means they don't think they're going to collect that money. They don't think those customers will be able to pay them. And there's a lot of work that actually goes into calculating doubtful accounts, because it has to be a pretty accurate prediction. If management's not able to accurately predict what's going to happen with their business, and they wind up being vastly off on these numbers, they will be hit hard by the analysts come time to report to the street. Okay? And it will greatly impact their stock. So for instance, if they lose a major account because that account suddenly went bankrupt and belly up, they have to include that immediately and push that information out to the street. Otherwise, they could be held liable for that, because that is part of their profitability and part of their financial security. Okay, so just understand how that works, what these statements are. The auditor's role, they basically come in and make sure that everybody's accounting for everything correctly, that all the data ties together, and that's one of my responsibilities, is to make sure that the systems that these people are using, all of the data flows through seamlessly, it's correct, it's automated in any way we can automate it so that there's as little human touch as possible. You want to eliminate the chance or the risk of human error, okay? So you've got to basically mitigate risk as much as possible. This talks about all of the accounting careers, and I can tell you that the typical salary range for this is really, well, if it's from Robert Half 2012, this was in 2012. Don't think that you're going to go out as a junior accountant in public accounting and make this money right here. It's not going to happen. The market's pretty tough. But everything else is virtually pretty accurate. Senior accountants don't really make that much either, unless you're in a big city. Okay, so we get down to the problems. So here's where we go through Chapter 1 problems. All right. We are going to take a look at... So the first problem that you have to do is literally telling the difference between sole proprietorship, partnership, and corporation. I'm not going to go over that one. You guys can do that. Then we get down to problem 1-6A. So let's go to problem set A. And all right, so problem 1-6A. Let's take a look at this. It's asking you to create an income statement and a balance sheet using these numbers, okay? So prepare an income statement for the month of March, prepare a balance sheet as of March 31st, so the end of the month, like you would, okay? So here's our handy dandy little sheet. Okay. All right, so here's what's going to happen. I am going to put anything that should be a debit here and anything that should be a credit here. Okay? So in this problem, here's what we're going to do. Obviously, we only have revenue of delivery fees because that's what this business is. Okay? It's a delivery service. Okay? So it gives you all of this information. You have to figure out where it goes. All right? So let's see. Delivery fees earned. Anytime you see the words earned, revenue, or sales, this is where I told you don't get hung up in the terminology. This is revenue. Okay? So that $19,300 is going to actually be a credit. Okay? Now, why is that a credit? Does anybody know? To increase revenue, listen carefully, to increase revenue, it's always a credit. If you have to decrease revenue, meaning if you have to give somebody a credit back to them, revenue is debited. Now my question to you is, where does this go on the balance sheet?
Accounts receivable?
If it is on account, it would go to accounts receivable. Very good. If they paid cash for it up front, it would go to cash. Does everybody understand that? Okay. All right. So then, now that we have this over in our credit section, anything that is an expense is going to be a debit. So it's going to be over here. So let me make sure I labeled this. Okay. So we go back to our problem, and we're looking for rent expense. Here's our rent expense. It's $1,500. So this literally becomes an exercise of filling this in, right? And then you have to come down here, and this is where I'm going to show you how to do formulas, so pay attention, okay? If you want to have it automatically calculate net income for you, all right, you can, and I'll allow you to do this. And we won't necessarily use the whole debit and credit thing on this right now, but I'll allow you to do this. So the total expenses is going to be adding up all of these lines. Okay, I'm not going to fill in all of these lines and give you the answer, but here's what you can do. You can hit the equal sign and do the word sum, parentheses, and then come over here and click and drag all the way up. And you see what it did there? It said B7 colon, meaning through, B12. So it's saying these cells, B7 through B12, that's what I want to add up. And then you can either close it with the parentheses or just hit enter, and it's going to total that. So as we add more numbers, and this is not the right number, but as we add more numbers, you'll see that formula changes. You guys see that? Okay. Then, if I want to figure out what my net income is, I'm going to do the equal sign again. I'm going to click on this cell, and I'm going to subtract this cell. Okay? So all I did, again, was click on my revenue, my total revenue, minus my total expenses. Hit enter, and there you have it. Everybody understand how to do it?
Yes.
Okay. Is the balance sheet to check our work? No. The balance sheet is different. The balance sheet in this case is likely not going to match up to like any of this. They're just basically, the point of this problem is to really just get you in the habit of where you need to put things. Okay? So don't get too hung up on.
So would we actually, would we cut out those cells then and start a new Excel sheet for that to be properly turned in?
I'm sorry?
Would we actually cut out that section of the Excel sheet and start a new Excel sheet
No,
for it to be properly turned in?
I'm going to put this Excel sheet out there. I'm just not going to have any of the numbers or formulas in it.
Okay.
Okay? Because I want you guys to go in and actually enter this stuff in so that you get in the habit of doing the formulas and everything else. Okay?
Yes, and then my other question would be with the expenses. Would it go in, was that C13, or could it go under B13?
I don't follow. Say that again?
Well, I noticed that the total expenses, you have it in cell C13.
Oh, okay. Okay, yeah.
Can it actually be in B13?
Yeah, it doesn't matter.
Okay.
It's wherever you want to put it. It doesn't matter whatsoever.
Okay.
Go over there.
Thank you.
No big deal. You'll find I won't get hung up too much in the details of formatting and everything else. I would ask that in all of your homework and all of your exams that you turn into me, that you do as much formatting to make it as easily readable as humanly possible. Because keep in mind, I've got about 40 of you in 2 classes. So I look at this 40 times to see if your numbers are right. If you make it difficult to read and I can't find the numbers or can't figure out what you're doing, I can't give you as much credit. And I will tell you, that's one thing I forgot to mention, especially on your take-home exam, the more work you show me and the more formatting, things like that to where I can see what you did, because you won't have one of these sheets on the final, okay, or on the midterm for that matter. The more I can see you do, the more credit I can give you, because I do give partial credit. Okay, so just make sure that again you're turning in the best work that you can to me. Okay, make it easy for me to grade it. Okay. All right, so again, you're basically just going to go in and fill in all of these on the balance sheet as well. So like for instance, cash. They tell you that cash is $12,900. So you put $12,900. Oops. Oops, if I can type. Okay. Your accounts receivables, $9,700. So again, $9,700. So you are literally going in and just adding this up. Now, what did I say earlier about this? This has to equal this. So this is going to be the total of all of those. And this is going to be the total of whatever total stockholders' equity and total liabilities is. Okay? These two numbers, when you get done filling all of this in, should equal. They should be the same. So here's your check. If this minus this doesn't equal 0, you have done something wrong. Okay? Does that make sense? That's why we call it a balance sheet. It has to balance. This number and this number always have to equal. It has to balance. Okay? So please, please, please make sure you check that on every balance sheet you turn into me, because it will always be equal. Okay? All right. The next problem, E212B. All right, so this is where we're getting into your journal entries. Okay? In a journal entry, you're always going to have 2 sides to the entry. So for instance, this is going to be the debit side. This is going to be the credit side. Okay? So this is where you can see, for instance, that the account will actually offset itself. All right? So in E2-12B, let's see here, back to the book. That's actually, why don't we go through chapter 2 first before we talk about this, huh? I'm getting ahead of myself. Alright, so we're going to go through chapter 2 now. Does anybody have any questions over chapter 1 between the income statement and the balance sheet on these problems? You guys good with them?
Yes.
Awesome. Okay. Alright, so let's go through chapter 2 real quick. Alright. Beginning. Okay. All right, so Chapter 2 is all about the accounting cycle. All right, so there's 5 major steps. You analyze transactions, record them, so you journal transactions, prepare an adjusted trial balance. We'll see what that is here in a minute. You adjust them, so you make all your adjusting entries, and then you report, basically preparing the financial statements, and then you close it out. So whenever you hear accountants talk about close, that's what they mean. They're going through and doing all of this, and then they're closing everything out, and the financials are done. They've been created for the month, and you basically shut down the month to where nobody can change anything anymore. Okay? So that's the actual accounting cycle. Analyzing transactions, again, you can see how important this is. Assets equals liabilities plus stockholders' equity. Okay? You've got various types of transactions. All right? This is actually the accounting equation expanded. Okay? So you can see here, assets equals liabilities plus stockholders' equity. Stockholders' equity equals common stock and retained earnings. Okay, retained earnings equals revenue minus expenses minus dividends. All right, so that actually lines out the entire accounting equation. All right, make note of this and use it because you will likely need it. Okay, so this walks you through basically doing a journal entry for the most part. So transaction 1, issued stock. So you've increased your cash because the stockholders have to give you cash to get the stock. Okay? So they gave you $30,000 for their stock. And you've also increased your common stock. Okay, so that's the double-sided entry for issuing stock. If you pay rent in advance, which most everybody does, okay? Landlords don't like to get their rent after you've used the property for the month. So you pay rent in advance, right? You've got your $30,000 cash that you got from your stockholders up here, and you paid $10,800 in rent. So now your cash is only $19,200, but you have an asset of prepaid rent of $10,800. So while you have an offset to one asset, here's the other side of that. So this is your entry. If you prepay rent, you're going to add that rent to your asset, but take it away from your cash. Okay? Stockholders' equity, common stock doesn't change. It's still there. Okay? So these are examples that are all walking you through the various transactions that can occur in a company. Okay? I'm not going to walk down through all of them. You can go through those. Okay? And then this is what a summary looks like of all of those transactions that they just went through up there. Okay, so you can see you've got your assets, your liabilities, and your stockholders' equity. And you see here are the accounts that are under that. So cash, AR, office supplies, prepaid rent, and equipment are all assets. Accounts payable, unearned revenue, and notes payable are all liabilities. Common stock and retained earnings are part of stockholders' equity. Okay? So use these exhibits to your advantage. Okay, this will be a good reference for you to take a look at on these problems. All right, so the account system, T accounts. This is a T account. This is what you're working on in many of these problems. Okay, and basically it's just noting each entry. So like the T account number 1. The first entry to cash is number 1. So basically you're going to go down the problem and you're going to say this is cash, this is cash, this is cash, this is cash. And you just number them. That's it. And then it put it on the correct side, okay, whether it's a debit or a credit. Here's the debits and the credits, okay. Debits always go on the left, credits always go on the right, okay. Here is, you might want to highlight this in your books. Increases in assets, dividends, and expense accounts are debit entries. Increases in liability, common stock, and revenue accounts are credit entries. If I were you, I would highlight this, fold the page back in your book, and make sure you remember or put a little sticky note in it to say debits and credits. This is what I need, because this tells you a decrease in an asset, dividend, and expense account are credit entries. So that means they're credits. Decreases in liability, common stock, and revenue accounts are debit entries. Okay? Make sure that you remember that. Okay? Here's another way of looking at it. Assets, debit, DR means debit. Why they came up with that, I don't know. DR means debit. Okay? Debit for increases to assets, credit for decreases. Liabilities is a debit for decreases. Again, make a note of this page. You're going to need it. Okay? Recording transactions. Basically, you have what's called a chart of accounts. Okay? So when you go in as an accountant, you have to figure out what their chart of accounts is. And I will tell you, it starts at 1,000. 1,000 is usually cash, and it goes down 12,000 or 1,200 is usually AR, 1,300 AP, 1,400, and it goes on down the line. So whenever you go to a company, you can pretty much pick up what their account system is, because everybody does it virtually the same. They might add it, they might make it 10,000, 12,000, or it might be 1,000, 1,200, 1,400. It just, they add zeros. That's all there is to it. Okay? So that's what the chart of accounts is. It's just a listing of numbers of what they want their accounts to be. So 1,000 might be their cash account. 1,200 might be their AR account. Does that make sense? Just like down here. You see 110 is cash, 120 is AR, 130 is office supplies, 50 prepaid rent. These are their GL accounts. When we say GL, we mean general ledger. Okay? And general journal is a journal entry. Okay? So a journal entry looks something like this, where you're telling what you're debiting and what you're crediting. Notice that if you add this up, it has to equal 0. So you can have as many lines as you want on this journal entry. Okay? But in the end, it has to total 0. Alright? So here are some illustrations of the recording process. Right, and it walks you through each and every one of them. Go through and look at them. And then this is what the final journal looks like. So these were all your T account, basically. This is what your final journal is going to look like. So this is what I mean when I say lines. You can have this line, that equals 0. These two, 0. These two, 0. 0. 0. And it goes all the way down. Now, notice, you can split this out. Okay? So, for instance, right here is where we're seeing fee revenue. Some of our customers paid cash up front. Okay? The other customers did not. They paid on account. When it says paid on account, that means they paid on credit. Okay? that means you're still owed that money. That's why we call it accounts receivable. We're waiting to receive that money, okay? So if you total these two, you can see that this was our total revenue for the month, okay? And this is what we received, and this is what we're waiting on. Does that make sense? But you see, when you total these, or when you offset these three, they equal 0. Okay? So make sure you're very careful of that. You will have to be able to do this, okay, in this chapter. So you will be asked, you will be told basically that, you know, a customer paid cash up front, or a customer did, you know, purchase this on account. Okay? Again, here's your general ledger. These are all your T accounts. Okay? And you can see here's your assets, here's your liabilities, here's your stockholders' equity. This is the way I would like for you to do it. Okay, so that you get used to it and you understand that, hey, I've got my assets, I've got my liabilities, and I've got my stockholders' equity. Okay? Once we do all of that, we get a trial balance. Okay, that's just a listing of all accounts from the general ledger with their respective debit or credit balance. Okay, so basically that's saying, here's our unadjusted trial balance. We've got a debit for cash, AR, office supplies, prepaid rent, blah, 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 all the way down, right? And we total that up, it equals $90,100. Then we come over here and we add in all of our credits. Now, again, keep in mind, you're pulling this from these T accounts. If it's on this side, it's a credit. If it's on this side, it's a debit. So you list out the balances. This is where we're getting our trial balance. So here's the balance of this one. Here's the balance of this of AR. Here's the balance of office supplies. And you'll see these numbers are reflected down here, right? So that's where you're pulling these numbers from. Does that make sense to everyone? You have to do your T accounts before you can get your trial balance. You'll also see that your trial balance equals, because what did I say about a journal? It has to offset to 0. So when you subtract these two out, it has to equal 0. Okay? Does that all make sense? All right, we're going to go on to the problem. So this is exercise 2-12B. And make sure you pay attention to these. I know it can be confusing. But E means exercise, P means problem. So make sure you're doing the right one. Okay? All right. E2-12B. Okay, so this one. Here is the problem. Okay? You're going to determine the balance in each account and prepare the trial balances of October 31st. So you have to create the journal entries and record the October transactions and T accounts in order to get your trial balance. Okay? So the first thing we're going to do is come down here and put in our debits and our credits for each transaction. Okay? So this is going to record stockholder contribution. So first thing we're going to look at is this guy. Thomas started his law practice by contributing $20,000 cash to the business on October 1st. He received common stock for his investment. Okay? So he got $20,000. So that's a debit, right? Because that's an asset. We want to increase our asset. He gave $20,000 in common stock. So the good news is, once you get one side, you know the other side has to be the opposite. You cannot have two debits, right? Then we go down and we see he purchased office equipment on account. Pay attention to this. He purchased it on account. That means it's accounts payable. If he had not purchased it on account, it would be from cash. Okay? Because that means he paid out $12,400 in cash. So if he purchased office equipment, we're again increasing an asset. So to increase an asset, we debit it. Our accounts payable is then credited because we're also increasing our accounts payable. We're increasing the money that we owe somebody. Okay? So that's what you're going to do with each one of these, and you'll see it just goes on down. These are all the transactions that are in those problems. Okay? And then 12 to be continued is all of those entries. So what you're going to do is you're going to come back up here, and every place you see cash, okay, this is number 1, right? Here's number 1. So 1, I'm going to put 1, $20,000, right? And then my next cash that I see is right here. Okay, so whatever this is, if it's a debit or a credit, I would put it, and it turns out that it's actually a credit. I'm doing this so you can see. So then I would put the number of that, which is number 3, on the credit side. Okay? Does that make sense? You see how this is working out? And you do the same thing for anything labeled accounts receivable, like these. You put it on the appropriate side. This one is office equipment, same thing. Put those on the appropriate side. Okay. And then, at the end, you're going to come down here and put the trial balance. So, this is going to wind up being your balance. And you don't have to write the word balance, but what I would do, if I were you, is I would take and sum, or add this plus this, because there's 2 of them, and then subtract out this minus this minus this minus this minus this. And that's actually going to give you, it says value right now, but once you fill in all these numbers, take that back, don't put the 1s and 3s in. I want you to get used to doing formulas. I won't care about, as long as this number comes out, that's all I care about. Oops, forgot to subtract out that top one. Okay. So does that make sense to everybody? Then this balance is what you are going to pull down here. So if you want to link cells, you can go in and you can hit equal, and then come up and click on the one you want to pull in there and hit enter, and watch as I change this. You see both numbers change? See they change? So that's called linking cells. Okay? So if I were you, I would go in and I would set all of that up, get all of this linked, and then this literally creates itself for you. Okay? The total, same thing. You're just going to add everything up. Right? And both sides should equal 0. Has to be even. Remember that. So this, when you subtract out your credits from your debits, That should equal 0. Okay? Does that make sense to everyone? Everybody still with me?
I'm here.
Yes, we're here.
Sorry.
Yes.
I know.
I do have a quick question.
Sure.
For the formatting at the top of the page,
Uh-huh.
scroll back up. Okay. Oh, I'm sorry. Down a little bit further. For the debits and the credits, are the debits always the first line item listed?
No, not necessarily.
Okay. I just meant in general for formatting. Do you prefer that the debit be the first line item?
Yeah, or I'm sorry. So debits should always be on the left, credits should always be on the right. Is that what you're talking about?
Well, it seemed like it was always debit, credit, debit, credit. So the first line item for line 48, number 1, the debit is the first one of that grouping.
Right. Yeah.
Is that how you want us to set it up?
Yes.
Okay.
It's easier for you to organize it that way. But if you don't do it, especially in the beginning, I'm not going to count off for it.
Okay.
I don't get that. The biggest thing is getting the numbers right at the end and getting your balances right at the end. That is what I'm mostly concerned about.
Okay.
How you get there in between is up to you as long as it's right.
Gotcha. Okay.
Okay?
So if he receives $20,000 cash for common stock, how is the $20,000 of debit for cash?
Because
Because isn't that revenue increasing?
the company itself is receiving $20,000
Okay.
to be able to spend. So whether you are paying yourself or you are paying your company, you're getting $20,000 in stock back. Okay? So don't think of it so much as I just paid $20,000 for, to get stock. Don't think of it like that. Think of it, the company received $20,000 in cash for $20,000 worth of stock. Take the me out of it. Does that make sense?
Yeah, I guess I see $20,000 as being a positive as opposed to going out and decreasing revenue.
It's not decreasing revenue.
Right, but I thought debit decreased revenue.
A debit does decrease the revenue, but this is cash. Cash is on the balance sheet.
Okay.
Remember? It's
Yeah.
right here. Revenue is on the income statement.
Okay.
Okay? So cash is an asset. You want lots and lots of cash as a company.
Definitely.
Cash is an asset. Cash is always going to be an asset. Accounts receivable is an asset because that's money you're expecting to collect. Okay? And we'll get into a lot of that. I kind of wish they would teach you that before they did the income statement and balance sheet because it might make more sense to you. But for now, we'll get into that.
So if you
What's an asset and what's a liability and what's revenue and what's expense. The biggest thing is that you understand your...
So if we're getting cash or...
Go ahead.
So if you're getting cash or, like you said, or anything receivable is considered a debit?
Yes.
I guess I'm with John. I'm a little confused on that.
Okay. So, in order to, on a balance sheet, don't think of... Some of you are probably thinking about your bank statements, right? And how you debit,
Yes.
credit that. Forget that. Okay? Here's why. In a bank, you have to think about you are their customer. Okay? So if you think about the fact that you are their customer, when you deposit money in, that's an asset to them. And it's a debit to them. Okay? When you take money out, that is crediting their balance sheet, okay? But to you, it's just the opposite.
Okay.
Because you are the customer, right? When you
Right.
put money out, it's debiting your account.
But it's adding to theirs.
But it's adding to theirs. Right. So
Okay.
actually, you have to look at yourself from a different perspective when you're thinking about bank accounts, because you are on the other side of this whole setup. Okay? So if this said Bank of America up here, whenever you pay them a fee, it's actually a credit. It might be a debit from your account, but it's actually a credit to them, to their revenue. Okay?
Okay.
Does that make a little bit more sense?
Okay.
That makes a lot
A
of
little
sense
bit.
now.
I just saw that he was getting $20,000 for common stock. So to me, it seemed like it increases the revenue, but it has nothing to do with revenue.
Right. Right. So common stock is always going to be dealt with here on the balance sheet. Okay? Common stock is never dealt with up here. It is not revenue in any way, shape, or form. Okay? Common stock is an asset, and people pay companies money for that common stock. Okay? So they are paying them cash for that common stock. And it has to be paid in cash because there's not a company out there that will sell you stock on account. Sorry. Okay?
Okay.
Does that make a little more sense?
Yeah, a little bit.
Okay. The big thing that you guys need to really work on and really understand is what goes on what statement. So on the income statement, you're always going to have your revenue and expenses, which is going to equal out your net income. Revenue, expenses, net income. What makes up that? Revenue is always going to be fees earned, sales, income, whatever they want to call it. Okay? Expenses is always going to be your bills, like your rent expense, your advertising expense. Anytime it says expense behind it, you know it belongs on the income statement. If it says expense, it has to go on the income statement. And it's going to get a little confusing because you're also going to have down here accounts receivable, supplies, prepaid rent, okay? Prepaid rent. That is not the same thing as rent expense. Rent expense and prepaid rent offset each other. So your rent expense up here is a debit, your prepaid rent would be a credit. Okay? So just really pay attention. There's a lot of great examples in your book. And really pay attention to those and study them. Okay? And go through all of those exhibits in your book. All right? And when you have questions or you don't understand why something belongs where it does, please ask me. Okay? All right. So, last part of this is 2-12B. Same thing, you're going to do the trial, you're going to get the trial balance by doing the journal entry, right? Then you're going to do your T accounts, and then you're going to transfer all of this down into your trial balance. 2-13A, same type of setup. Your journal entry, and then you're going to continue on with your T accounts, get your balances, and transfer those balances down here into your trial balance. Trial balances, totals must equal. Okay? Totals must equal, always, on the trial balance and on the balance sheet. Does everybody understand how to do this? To make a little more sense now.
A little bit.
Okay.
Yes.
All right. So spread the word. Make everybody watch the webinars, because these are what's going to help you to get through this class. I promise you, I've had students that thought they could get it all on their own without watching them, and they don't do as well.
You said you post these also, that you can review them.
Yes. I have
How
been
do you?
recording this entire episode.
Okay.
It usually takes me a couple hours to get it to fully process so that I can post it, but it will be posted so that you can go back and watch it, pause it, rewind it, replay it, do whatever you need to, as many times as you want.
So will you be doing this every Tuesday, regardless?
I will actually, the first one I did on Tuesday because we have our homework due before the weekend, but I'm actually going to be doing these on Sundays.
Okay.
In hopes that more people can make it. I usually do them like Sunday afternoon about 2 o'clock.
Perfect.
So this coming Sunday, it being Labor Day weekend, and I'm going to our families in Mississippi. I might make it a little later this Sunday just to give myself more time to get back. So it might be like 4 o'clock Sunday. But normally I do them like on 2 o'clock, at 2 o'clock on Sunday, and the reason for that is it's one of my down days. I have assignments due for my doctorate on Saturdays. I don't have anything due on Sundays. So it's just easier for me to work on the stuff with you guys and dedicate as much time as possible to your questions and everything else. I don't care if the webinar goes 4 hours, as long as you understand at the end of it what needs to be understood. Okay? So that's another reason why I try to do them on weekends. Okay?
Okay, thank you.
No problem. All right, so everybody good for now? You know, you can always text me, email me, what have you. I will try to check the discussion board, the questions to instructor forum, but I will tell you you'll get a quicker answer via text and email, simply because I have access to it on my phone and can get it pretty much anywhere. It's kind of hard to see the discussion forum in Blackboard on my phone. It's a little easier to read in text and email. Okay? All right, guys. I look forward to class with all of you. I look forward to everybody making an A. That's my goal. Hopefully that's your goal too. And, you know, just work hard. I encourage every one of you to make sure you understand. I mean, we're going to cover a lot of stuff. And it's not easy stuff. I'm not going to lie to you. I first went through accounting and I didn't understand half of it. But I also didn't have an instructor that was doing webinars and everything else and doing a really good job, or trying to anyway, of explaining everything. So if I'm not making something clear, speak up and tell me. My feelings will not be hurt and it will not affect your grade. You know, so just be very open and honest with me, and I will be happy to do my best to help you in any way possible. But I do, in turn, expect you to put forth your best effort and your best work. Okay? As I said at the beginning of this, I'm a student too. So I hold myself to the standards that I expect from all of you, and I would hope that you would do the same. Okay? I know there will be some that don't want to put in quite as much work. You feel like you'll never use this. But I can also tell you, I can show you very much how you can use accounting just like this to your own advantage to make a lot of money. So, it's up to you. Okay? We'll talk more about that at another time. Work on mastering these 3 financial statements and understanding debits and credits and understanding journal entries, trial balances, and T accounts. Okay? That's Module 1. If you can get that, you have a great foundation to be very successful in this class. Okay? Thank you, Lyndon. I'm glad you guys enjoyed it. So you all have a great week. I'll see your homework Thursday at 11:59, and I will likely talk to you again on Sunday. Okay? Announcements coming out about that. Announcement for the recording as well will be out as soon as I can get it processed. All right? Thanks, guys.
Have a good night.
Thank you. Have a good night.
You too. Bye-bye.
Good night.
Bye.